promo. And there's a live picture of the floor of the New York Stock Exchange, where we are seeing some weakness on Wall Street today. Growth concerns fueling a widespread sell-off in the equity markets. Sellers outnumbering buyers as we enter the final and most important hour of the trading day. Hi, everybody. Welcome to the Closing Bell. I'm Maria Bartiromo at Cnbc headquarters. Dylan Radigan, my partner, is off this week. Right now, we're seeing weakness across the board on Wall Street. Take a look at where we stand as we enter the final stretch, with the Dow right now down about 42 points, off of the worst levels for sure, but still negative at a level of 12,421. Volume is lightening as we approach the end of the week and a long holiday weekend. The Nasdaq also weaker today, down about 12.5. That's 0.5% at 2415. And the S&P 500 looking at a loss of 5.5 at 1418. A weaker than expected Philadelphia Reserve report today, Philadelphia Fed report. It showed that the December index of business activity fell more than expected. That is the really overriding tone set this morning, and that is what is pressuring the market today. It comes on the heels of November's modest gain. Earlier, we saw third quarter GDP revised lower as well, growth coming in at 2% versus the 2.2% the month before. All of that along with hawkish inflation comments from Richmond Federal Reserve President Jeffrey Lacker, putting pressure on the markets. Meanwhile, it's also a relatively quiet day on the M&A front compared to what we have been seeing certainly the last couple of days and over the last year. But if the past is any indicator, more big deals could still be in the works. According to Thomson Financial, last year over $30 billion worth of deals were announced in the final days of the year. Don't count out M&A in 06 just yet. We'll talk about more deals and the outlook on IPOs a little later on in the program. But first, let's get the latest on what's happening. Our team covering the markets at the NYSE, the NYMEX, Chicago Mercantile Exchange, and the NASDAQ, along with our special guests. First, Melissa Lee, our eye on the floor of the New York Stock Exchange. Melissa.
Good afternoon to you, Maria. And starting at about noon Eastern time, we did see the markets take a turn for the worse. And that, of course, as you had mentioned, was when the Philadelphia Fed released its latest reading. And, of course, that reading was the weakest reading that we have seen actually since April of 2003. We saw a slow decline there for the markets. And, again, we are off of our worst levels of the session, but still firmly lower as we head into that final hour of trading. Take a look at the cyclicals, because it is the stocks most closely tied to the economy that did show that dip starting at noon. And we did see that intraday turn on the Morgan Stanley Cyclicals Index. We also saw it in the S&P Materials. S&P Materials actually the weakest S&P sector on the market today. Names like Alcoa, Newmont, Phelps Dodge. Also keep in mind that metals in general weak. Gold stocks weak. Copper weak. Copper specifically because the metal itself hit a fresh 6-month low in New York trading today. We're also watching shares of USG. It is a buildings material stock. Take a look at the intraday here, because you see the action in the stock intraday. It's made a final payment to the U.S. Gypsum Asbestos Personal Injury Settlement Trust, a payment worth more than $3 billion. Also news that Berkshire Hathaway may acquire up to 40% of its shares through 2013. The stock is down, but again, the action is in the intraday and the turnaround in the stock that we did see. We are also watching shares of General Electric, the parent company of this network. GE has had a terrific run in the past week and a half or so. Of course, it was all started with those positive comments out of the analyst meeting, the boost in the dividend, and talk that potentially GE Plastics may be on the block. Well, today we are seeing the first down day for General Electric since December 13th, giving up some of those gains. And we're also watching shares of Rite Aid swinging to a small profit in the third quarter. This despite Walmart's low-cost generic drug plan. The company coming out standing by 07 forecasts, and the CEO on the conference call making some comments about whether or not RAD would buy a pharmacy benefits manager. They said they are not in the market, and of course they are making this comment simply because Express Scripts and Caremark and the potential breakup of the CVS bid. Now let's head down to the New York Mercantile Exchange and check in with Sharon Epperson. Hi, Sharon.
Hi, Melissa. Well, natural gas is usually the focus of the day on Thursdays because, of course, it is inventory day today. But today we got a rather neutral report from the Department of Energy showing the natural gas supply.
Thanks so much. Meanwhile, we mentioned it at the top of the show, some hawkish comments today from Federal Reserve President Jeffrey Lacker. He is bringing inflation back into the spotlight. Let's get more now on what fixed income investors are saying about that and the Philadelphia Federal Reserve report. Rick Santelli live at the Chicago Mercantile Exchange. Rick.
Well, Maria, of course, everybody was focused on everything in that several-hour period. We had the Philadelphia knuckle sandwich, of course, weak Philly manufacturing. About an hour after that, Mr. Lacker's comment, but it wasn't the hawkishness that the market paid attention to. It was some of his concern about profit. Now we're going to go to Rebecca Jarvis and aim the wagons east to the NASDAQ market site.
Thanks a lot, Rick. Well, a handful of acquisitions making news today. They're not stealing a lot of headlines, but they are getting some pretty significant gains. First, we go to Psychiatric Solutions. Their offer to buy Horizon Health for $20 a share. Psychiatric Solutions right now up 4.4%. Horizon Health, as you see, up 20% on the news. Another acquisition, the company Huntington Bank shares offering to purchase Sky Financial Group. The deal would be a size $3.6 billion. And the two stocks, Huntington down right now on the news 7%, but Sky Financial up 14% on the news. Here's the big mover of the day. It's called Praxis. They're being bought out by GlaxoSmithKline for $5 a share. It is up 145.5%. Juniper Networks also up slightly right now, 0.3%. Earlier today, they announced that they'll be paying $900 million to pay for some stock options backdating that happened between 99 and 03. Then we've got RIM, Research in Motion, reporting at the end of the bell, after the bell today, excuse me. They're down right now 1.6%, but one thing to bear in mind, Palm reported yesterday, they're now up 1.8% after coming in with a disappointing quarter, so we may see the same thing happen with RIM. Now back to you in the studio, Maria.
Thanks very much, Rebecca. Stocks have been slipping some today on a slew of economic data that shows that the economy is in fact slowing. Many on Wall Street, however, are still optimistic that stocks will rally into 07. Here to make a bull case for 07, Brian Stein. He is an investment strategist with Allegiant Asset Management, along with Sam Stovall, the chief investment strategist with Standard & Poor's. Gentlemen, nice to have you with us. Welcome to the program.
Happy holidays, Maria. Happy holidays.
And to you, happy holidays. Brian, let me get your thoughts on 07 and how best to allocate your money.
Well, we're still positive on the equity markets for 2007. We've, of course, had a great rally since midsummer, but in spite of that rally, stock prices really have not kept pace with earnings growth. So we feel, absent really a earnings recession, there's still more upside for stock prices into 2007.
Sam, do you agree with that?
Yeah, we're looking for about an 8% price appreciation next year, about 10% earnings growth. And while we do think that the U.S. should do relatively well, we still think that the international markets might have a little stronger performance, especially because of the tailwind of a weakening dollar.
So what groups do you want to be owning then in that regard, particularly as the dollar is where it is?
Well, certainly the areas that have the greatest exposure could provide some nice returns. Energy has a 59% exposure to revenues from overseas from the S&P 500. Technology at about 56%, and then staples and industrials have a 43% exposure.
Brian, how are you allocating your money right now? Is it sectors or largely stock picking?
More so sectors. We are positive more so on the U.S. than international at this point because we are concerned that the dollar may actually stabilize and show some strength next year. We're fairly upbeat on the economy, more upbeat than most, and therefore we too think energy may be a sector that could do well in 2007.
So what about the blue chip stocks, those large multinationals? Do you think that's going to be the leadership group then?
We think that's the place to be because while the U.S. may grow, let's say 3% next year, the world's going to grow probably 5% GDP growth. The developing countries around 7%. So those large multinational corporations that can take advantage of that faster growth in developing nations should have better growth prospects.
Sam, even though we are talking about a slowdown in terms of the economy and corporate profits, right? I mean, when you look at the last quarter, Thomson Financial says it was 17% growth, and then, you know, Zacks will say it's 14% growth in earnings, but by all measures, they're still expecting profitability to come down in the first quarter.
That's right. Our expectation is we probably could actually see our first single-digit quarter. It's interesting how companies, because you can't agree on how operating earnings are computed, we see that about 18 quarters of straight double-digit increases, but we think that next quarter could be the first quarter in which we have a little bit of slippage. But in general, when we're seeing the economy expected to slow from a 3.3% rate to 2.3% next year, we're still looking for about a 10% increase in earnings because of M&A, because of share buybacks, because of the tailwinds of a weakening dollar.
So what were your thoughts on the GDP report today?
Well, my feeling was that certainly some concerns are that if we end up having an economy that slows more precipitously than investors had been anticipating, and at the same time we find that inflation is indeed a concern and that the genie is not back in the bottle, then that could say that 6 months from now the Fed might be required to lower rates but won't be able to do so because they would be refueling the inflationary concerns.
So, Brian, let me ask you about the Fed and rates. Are you expecting rates to come down at all in 07, or is the worry still largely inflation, growth steadying, and perhaps more interest rate hikes?
Yeah, we think the risk probably is possibly even interest rate hikes. It really comes down to housing and the economy, and we, again, think the economy may do better than many expect. The Fed clearly is more concerned about inflation than a weakening economy at this point, and if we get any pickup in growth in 2007, then the pause certainly is going to be on hold even longer.
Gentlemen, thanks so much for joining us. We appreciate it. We'll
Thanks,
talk with
Maria.
you soon, and have a great holiday.
Thank you.
Thank you so much. We've got about 45 minutes before the closing bell sounds. Check out the numbers. The Dow is down 33 points right now, and the NASDAQ is off 10. If Santa needs extra coal this year, he won't have a hard time finding it. Stockpiles are up, prices down. We'll talk with the CFO of Consol Energy, how his company is weathering the industry downturn. We'll focus there. Then millions, including me, can't seem to get enough of their BlackBerries, but is that enough to boost profits at Research in Motion? Find out what Wall Street is saying as we count you down to today's earnings report. And then after the bell, a lot happening. 'Tis the season to procrastinate. With Christmas just a couple of days away, consumers are finally starting to step up and spend. Our Holiday Central coverage looks at which retailers are poised to benefit. First, though, here's a look at where the action is on Wall Street. The most heavily traded stocks at the New York Stock Exchange. First Data, typically not on that list, as is EMC. Back in a minute.
You're watching Closing Bell on CNBC. First in business worldwide. The Bond Report.